Well, I think it's a combination of both. I know it sounds a little bit of a cop-out, but I do think we certainly have a situation where, well, first of all, that 3 month to 10-year inversion is steeper than it was back in March, so that's a concern. But the 2-year, 10-year spread, which is another one that people look at, it hasn't inverted yet. It's getting closer. So you like to see basically the entire curve invert before it really shows that we're going to have a recession going forward. But it hasn't been a very good indicator. And the thing about this whole situation is we were already seeing some signs that the economy was starting to slow a little bit even before the breakdown in the trade talks took place, especially in groups like the semiconductor stocks. But so it's just something where I just think that the markets were both the bond and the stock markets were planning for a lot of certainty in the second half, and we're certainly not getting that now with the change in the trade.
Okay,
deal.
so it's not maybe a red flag, perhaps, Matt, if I'm hearing you right, but maybe a yellow flag, something to watch. And if that 2 and 10, which is about 15 basis points from being inverted, if that inverts, then we got something.
Exactly, and I hate to say it, but rarely, and in fact, there may be one example, and there may not even be any, where the 2 to 10-year spread gets to 15 basis point and doesn't invert. So it's almost certainly going to invert. So it's a big concern out there.
When we look at everything else that is going on, I just said May on pace to be the worst month of the year for the NASDAQ, the transports, you name it, it's probably the worst month. But overall, we're still fairly higher for the year, double digits for the NASDAQ, double digits for the S&P 500. How do we read this month?
Well, the one thing we hear a lot of people saying, hey, geez, the market's really holding up pretty well. The problem is we have new news. I mean, it's the old saying on Wall Street, when the facts change, we need to change our opinions. Well, the facts have definitely changed when it comes to the trade issue, and it doesn't look like that's going to be settled anytime soon. Therefore, we have to reprice. And the problem is that historically, when the market does top out and roll back over, the first 3 or 4 weeks, the market always seems to hold up well because people just think, oh, don't worry, it's not going to be a big deal. Things are going to continue like they were. But when you get a change in the facts, eventually they come around, and that looks like to be what we're going to see today. With the futures down, and we have a number of the S&P breaking below key support level, as well as a couple other key indexes. So if we see, it's not Tuesday, it's the second day of the week, but of the trading week, we tend to get turnaround Tuesdays. If we don't get that today, we could be in for some.
It could be a wild Wednesday.